I'm here today with Andrew Beagley and Daniel Martin from the BDO Deal Advisory team to give some perspective on mid-market M&A transactions and what that might mean for the next 12 months. Okay, to kick things off, guys, so what do you think have been the major trends in M&A activity in the last year?
In the current year, Sam, we've seen very low M&A volumes or very low number of deals completed. This has not just been a New Zealand factor, but it's been evident overseas in the global markets as well. What's happened there, it's been harder for vendors and purchasers to agree on price. There's been fundamental differences in their view on earnings, the parties' view on earnings, uncertainty with forecasts, and general decline in the economic landscape. This has meant there's been a valuation gap in the market between those two parties.
And do you think that's going to change going forward? Change for next year?
I think as purchasers work their way through those factors and we come out of that tougher environment in the new year, you'll see that valuation gap close somewhat and M&A activity will increase off the back of that. So yes, I think they'll be able to resolve that.
So Andrew, what are your thoughts on 2023 M&A activity?
M&A activity is definitely reduced from the highs of 22, but we've still had quite a busy year. I guess only the completed deals are announced in the public, but as a team we've still been reasonably busy. It has slowed down as we've progressed during the year. Whether there's going to be a rush, a general normal rush to the Christmas period with advisors trying to get deals done, that's to be seen. I guess the other surprising point to us is the general robustness of the mid-market. I mean, there is a general cadence of transactions that occur, even though economic activity has got its challenges. So yeah, we have seen quite a robustness of deals, and that's I guess why we like the mid-market.
And what about inflation headwinds that don't seem to be going away anytime soon? What's your take on that, Andrew?
I think inflation will stick around for a while. So, I mean, the main impact of inflation to businesses is around people and supply chain. So I think we'll still see that. I guess the businesses that are able to pass that on to consumers will be able to, I guess, maintain earnings or grow earnings. Those that can't, then obviously earnings are going to go backwards.
You recently attended the BDO Global Deal Advisory Conference in Dallas in Texas. And what were the learnings from the conference there that's relevant to New Zealand?
I guess globally similar trends that we're seeing in New Zealand in the context that deal activity's reduced from the highs of 22. In particular, the US is really starting to be impacted by that. I think you know, what they explained to us from a PE perspective anyway, PE-backed deals, Q1 of 2020 was the lowest activity they'd seen since 2020. UK was less impact. They'd still had lower deal activity at the start of the year, but it sounds like they're starting to recover out of it at the back end of this year, which is positive if they're getting on top of inflation. The other relevant points, I guess, is ESG. So and for the larger private equity deals, ESG is becoming more and more relevant in terms of due diligence. So, and both from you know, doing ESG type due diligence on deals, and some PE have backed out of acquisitions because of deals or deal risks being identified as part of the ESG due diligence. But also from a returns perspective, I think some peers have seen some better returns generated from ESG related businesses that are more aligned with ESG in their business.
So just focusing on specific M&A sectors, anything you've sort of observed in specific sector trends and in particular infrastructure services this year?
We've seen a lot in the news recently with weather events and business disruption around a lack of or underinvestment in infrastructure services. At BDO, we've noticed a notable increase and been involved in a number of infrastructure services M&A, specifically around human resources, services supplying into infrastructure services. So we've really seen a large trend towards businesses being involved in M&A activity in infrastructure services.
Andrew, any thoughts from you on that?
Just consistent with what Daniel was saying, a good example of, I guess, services feeding into infrastructure is traffic management. We've seen an uptake in activity in that sector, which typically hasn't had that much interest in it, I guess. IT and software is another sector that continues to attract investment as well.
And what about M&A activity in the waste sector specifically?
We've seen quite a bit of activity in the last couple of years, Simon, in that sector. The waste specifically has some quite interesting features around it. High CapEx spend, long council contracts, inflation sort of resilient business model, which makes it a quite attractive investment to particular players, both local and overseas.
So any other industry sectors that have been reasonably active from an M&A perspective this year?
We've been busy in the health sector, which obviously has its challenges. There's been a lot of consolidation in the sector as businesses build scale to provide better and wider health outcomes. So busy sector, but always been busy in our view, and will continue to do so.
And is much of that private equity backed?
A lot of it is private equity backed, yeah, on the whole.
Yeah, and set to continue for next year?
I think the short to medium term, it'll continue as a strategy to keep consolidating the industry.
So what about M&A activity driven by private equity investors?
Yeah, there's still been quite a lot of activity from private equity from an acquisition point. We've seen, I guess, the number of players in private equity increase, not just from your usual New Zealand private equity players, but you've also got wealth funds establishing their principal investments teams, which use syndicated money to invest into the sector, or looking for attractive businesses. We've also seen family offices get more sophisticated. So there's a number of private equity funds out there, players looking to invest in quality businesses, and that doesn't really change. We remain very, very bullish around private equity as a sector. We don't see it changing, and we see activity actually probably increasing.
And many PE firm divestments or sales occurring this year?
No, not really, or not as probably normal as would expected. There is some recently in the market that we're aware of, but I think, and this was one of the points that came out on our at our Dallas conference, is that it's probably a bit uncertain for some or most private equity firms to look to divest their businesses. So they're sort of standing on the sideline unless it's makes sense from an industry standpoint point of view, like as waste, as Daniel's been talking about. But there is a lot of private equity owned businesses that, I guess are coming up to their natural cadence of ownership. So again, we look forward to, watching that space and seeing if there's more transactions that come.
And if we look forward to 2024, Daniel, what do you see for private equity activity continuing?
I think we'll see the slight uptake in more M&A activity with private equity. I think there's been a focus this year on some private equity players to build out more resilient strategies to ride out the tough economic conditions. But a lot of funds a lot of investees have been within funds for a long time now, and they're due for an exit at some stage when the conditions are ripe. So I think we'll see a slight more M&A activity in the new year.
And a lot of the M&A activity that's driven by private equity is not only their platform investment, it's their bolt-on acquisitions. And have you seen much of that this year, and what do you expect for next year?
Yeah, we've seen a little bit of bolt-on acquisition come through for some private equity firms as they build and buy, as they like to say. So yeah, we've seen some of it, some activity. But yeah, as I say, we'd expect that to continue into the next year as well. As they try and build their portfolio to look to exit, we expect there's a natural cadence of them trying to look for opportunities to increase, I guess, the size of their platform investment and then look to exit.
And Dan, for 2024, bolt-on for PE?
I think we'll see a reasonable number of bolt-ons. Yep. PE are trying to create value and add value, so I think that's definitely within their strategy.
So less affected by the macroeconomic activity?
I think they'll have a longer term view of the market and ride through this and continue with their growth strategy.
Okay, well thanks guys. It's been quite a challenging year in some ways, quite a year. Change of government, bit of economic turbulence, some green shoots on the horizon, but what are you expecting for 2024?
There's some general optimism and confidence coming back into the business community. I think people will go into 2024 a bit more looking at more acquisitions potentially. I actually don't think inflation's going to go away anytime soon, so that's going to continue for a little bit longer, which leads to be more important when you go in to look at a business and doing a deal. That due diligence needs to focus on underlying earnings and understand the impacts on the business around that. Also, I think the geopolitical situation is probably pretty interesting to keep watch off with what's happening over in the Middle East and closer to home with the South China Sea. So it's pretty hard to predict what's going to happen there, but businesses should be cognizant of what's going to happen, supply chain, etc., and may impact them.
I think I agree with Andrew's sentiment there. I think we'll see the valuation gap close a little bit more in the new year, which we'll see M&A activity increasing slightly off the back of that.
So we're currently partway through an economic cycle, and next year we're going to be further through the current down cycle, if that's what you want to call it. Do you think that will lead to any further M&A activity driven out of distress?
I think we'll see a bit more distressed M&A activity next year. We'll see non-core assets being divested. I think we'll see foreign-owned assets where the overseas parent is highly leveraged, entering some distressed situation, and they'll be looking to divest their core or their non-core New Zealand assets.
Andrew, your perspective on that?
The only thing I'd add is, I think distressed M&A there'll be an increased amount of it next year. I think, as the cost of the higher interest rate and the continuing inflation is going to continue an impact on businesses. So,
okay, well, thank you very much, guys, and certainly lots to think about for 2024. Change of government, more business optimism, some underlying fundamental drivers of M&A activity set to continue. Certain sectors likely to be more inactive than others, and we'll look forward to 2024.